Welcome, everyone, and thank you for joining today's webinar. In today's section, we're going to dive right into some of the key insights from recent research on accounts receivable management. As you know, AR plays a crucial role in maintaining strong cash flow and financial health in every organization. With the evolving business landscape, changes in technology, and growing emphasis on efficiency and automation, it's important to stay on top of the latest trends and challenges in the field. By way of introduction, my name is Kelley Pruetz, and I'm the Principal Research Lead for the Financial Management Research here at APQC. I joined APQC just over a year ago. I have over 30 years experience in the corporate financial world, most recently as Vice President and Treasurer of an international oil and gas company. Through my experience, I've navigated a variety of business and market cycles. There have been a lot of really fun projects and some difficult ones to work through, but I'm happy to be here and be able to share my experiences and my knowledge with our audience today. Here's the agenda I plan to cover. First, I want to give you a little bit of background, the context setting for the survey research that we did. We want to talk through some of the key performance measures for the overall accounts receivable processes. And lastly, we'll hit on the research highlights of what we learned from this research data and the current state of the AR process. And in the end, hopefully, we'll have some time for questions that you guys may have. So we surveyed 500 respondents to gain a deeper understanding of the current trends and best practices in AR. This report presents an overview of the survey findings, focusing on key performance metrics, practical insights, and the impact of technology tools. So this was the survey scope. So you're looking at APQC's process classification framework around the processes that we focused on in this survey. So APQC's process classification framework creates a common language to discuss, benchmark, organize the work the businesses perform. It's essentially a list of all the key processes performed in an organization, grouped in an order to show you how they relate to each other. So these three processes and all of the processes that fall below it were topics on the questions that we asked in this survey. We gathered insights from a diverse group of industries, representing companies of varying annual revenue levels and spanning multiple geographic regions. So metrics, we wanted to cover a few of the highlighted metrics that we find are important in the AR process. And so each company will have their own KPIs, as we call them, but these are some that we recognize as being important for companies to kind of track. This measure here, cost effectiveness, it calculates the total cost per 1,000 revenue to perform each of the three processes associated with accounts receivable. The total cost, as defined by us, is the sum of outsourced, overhead, personnel, system, and other costs. This measure will help companies understand all cost expenditures related to the accounts receivable process. So here you can see, if you look at the median and you look at the process accounts receivable process, they're spending 46 cents per 1,000 of revenue. On the manage and process collections, they're spending 23 cents at the median level. And for manage and process adjustments and deductions, they're spending 20 cents per 1,000 of revenue. So what our research showed was those performing at the top level, which is the 25th percentile, are spending about 1/3 as much as those who are processing at the 75th percentile across all of the different processes. Enhancing process efficiency in accounts receivable. This metric is used when assessing labor efficiency. It provides a clear picture of how well an organization is leveraging its human resources to generate revenue. So again, if we look at the median level for the three processes, process accounts receivable, there are 5 FTEs that perform that process per 1 billion of revenue. If we look at the manage and process collections, it's 3.7 FTEs per 1 billion of revenue. And lastly, the manage and process adjustments and deductions, you're looking at 3 FTEs per 1 billion of revenue. In each of these processes, our research shows a significant difference between those operating in the 25th percentile and those operating at the 75th percentile. So those operating at the 25th percentile are performing with approximately 3 less FTEs across the 3 different processes. So now we want to talk about automation in accounts receivable. Our research shows that approximately 50% of respondents are utilizing automatic match of receipts to open items in the subledger, and about 80% of customer receipts are automatically applied to customer invoices. We're not seeing, on these two, we're not seeing a large differential between the 25th and the 75th percentile, which to me suggests that a similar proportion of businesses are leveraging automation in the AR processes. DSO, I wanted to talk a little bit about DSO on this webinar, because we found when we did our priorities and challenges survey at the end of last year, our finance departments were coming back to us and telling us that one of the greatest challenges that they were having now, which was new from years past, was the fact that invoices were being slow paid. So more and more people were slow paying their invoices. So we decided to do a little bit of secondary research to kind of find out those that are operating at the 25th percentile, what strategies are you doing to kind of accelerate some of those cash flows? And what we learned was they recommended you establish and you communicate clear and concise payment terms upfront. So on every piece of document that's going back and forth between the two parties, you should include your payment terms. So in all the contracts, all the agreements, all the quotes. You should also allow for different payment methods. So not just the ACH and EFT or credit cards, but also Apple Pay, Google Pay, online payment services such as PayPal, Venmo, and Stripe. Also offering early pay discounts, which we've heard about those for quite some time now, but those seem to incentivize customers to pay early. And then lastly, to invest in your staff that is processing the collections, those that are going out and trying to collect those. Make sure they are educated and they understand the process and they have strategies built in to make sure they stay on top of the payments that are late. Process. We have just a couple of process things here, but we wanted to talk about what methods for customer remittance advices are you using? And we found that 60% were using EDI, 50% using a customer portal, and these were a check all that apply. So, it could be companies that are using a combination of more than one. Then we also asked, what are the top reasons for adjustments and deductions? And what we found was delivery times not being met, whether they were late or early, damage on delivery, and then also duplicate invoices in total or in part, kind of made up the top 3 reasons that companies were having to process, whether it was an adjustment or a deduction. We asked about the use of agile practices, which is a set of principles and methodologies aimed at enhancing flexibility and collaboration in the accounts receivable processes. We found that most respondents are at some level of use across the 3 accounts receivable processes. But you can see process accounts receivable, they're using it to a substantial to a very large extent. They're taking the most advantage of using the agile practices. And then lastly, the managing and processing adjustments and deductions, they're using it, and it coming in third would be the managing and processing collections. So while they're using it, they're not using it to the same extent as the other two processes. Now we're going to talk a little bit about technology. So I thought this was an interesting question. We wanted to find out, do you expect developments in technology to result in training for your teams in the next 12 to 18 months for the accounts receivable, collections, or adjustments and deductions? And what we found was everyone agreed that training due to new technology would occur during the next 12 to 18 months. I think with the advances in AI, the advances in cloud computing, it makes sense that everybody is spending part of their budgets on technology and trying to take advantage of some of the efficiencies that can be gained. So we asked, have you implemented robotic process automation within processes of accounts receivable? And approximately half of all respondents are currently taking advantage of RPA in some capacity, reducing both the time and the cost of operations while enhancing accuracy. And you can see that RPA has been fully implemented over the three, but not at a very high level on the managing and processing adjustments. Planning to adopt and currently some work being done fills out the greatest portion. No plans to adopt, really just, again, the managing and processing of adjustments and deductions had the highest percentage there. So just the flip of being fully implemented, which makes sense. The adoption of AI not only automates and speeds up the accounts receivable process, but it also provides deeper insights into customer payment behavior. So when asked about the use of AI in accounts receivable processes, we found that companies are at a relatively same stage of implementation across all three of the process, with approximately 50% at the piloting, implementing, operating, or optimizing stage. So everyone is relatively at the same stage. Then we moved on to Gen AI. While traditional AI can be ideal for structured data processing, generative AI can be used for automated communication like email drafting and customer inquiries. Again, we found that companies are at relatively the same stage of implementation across the three processes, with approximately 35% at the piloting, implementing, operating, and optimizing stage. Unlocking benefits with generative AI in accounts receivable process. So again, this was a check all that apply, but we found 56% report improved decision-making as a key driver. We find that create personalized messages and payment reminders is high on their list, and improving the quality of the content. By leveraging data processing, predictive modeling, and automation, Gen AI enhances decision-making within the accounts receivable processes. So the cost associated with implementing AI. And what we found was 22% of our respondents report a decrease in their cost, while another 22 report an increase in the cost. All others cite no change. So I think this has a lot to do with the high initial investment required for AI implementation. It may delay the realization of cost savings. I've had a lot of conversation with some of our members who have told us they're working through either an implementation of an ERP system that will incorporate AI, or they're doing an upgrade to their current system to be able to take advantage of some of the AI tools that are available. Here we were talking about the use of cloud, which is increasing as time goes on. There's more and more people who are taking advantage. And I certainly think of, everything that happened in 2020 and people working from home. This certainly took off quite a bit. So we're talking about two different processes here, and these are the two more straightforward and repetitive processes of the three that we've been talking about today. One, process accounts receivable, and two, manage and processing collections. So you can see no one indicated that they were not using cloud at all, whereas everyone else is pretty much at a different stage of the implementation of leveraging cloud technology to enhance process efficiency, scalability, and accessibility. Now, this is the third process that wasn't referenced in the prior slide, managing and processing adjustments and deductions. So this is a little bit more one-off, but due to the need for a more cautious and measured approach in managing the adjustments and deductions, respondents report a slower adoption of cloud technology for this specific process. And you can see here, we do have 13% who said they weren't considering it, which previously on the other two processes, we didn't have anyone who wasn't considering it. Which best describes the system you use with each process of accounts receivable? And what we're seeing here is basically customization versus standardization. So most respondents are reporting for all three of the processes, either an internally developed technology or an ERP type of system. Now we are seeing also for the process accounts receivable, there's some third-party accounts receivable specific systems that are being used to help round out the technology there. Sustainability. So the emphasis on reducing greenhouse gas emissions is driven by several factors, including climate change awareness, regulatory pressures, ESG investing, and global agreements. So we asked, what have you done to reduce the impact of greenhouse gas emissions from the accounts receivable, collections, and adjustments and deductions processes? And I think we're seeing here very much what we're seeing for other finance processes, which is reducing emissions from buildings in which the finance staff work, but then also reducing emissions from finance staff travel in the course of their work. We wanted to leave a few minutes to see if anybody had any questions regarding the slides that we've just gone over in the accounts receivable process. Okay, just a couple of reminders here. You will receive a copy of the slides and the recording of this webinar in just a couple of days. And I want to thank you so much for joining us today. If there's any specific questions, once you receive this deck and you look through it, if there's something that you'd like to ask, please feel free to reach out to us. Go ahead and just send those questions over to me and I'll be happy to follow up with you. I'll leave you with my contact information here, and I'd love to hear from you. If you have a case study or a success story that you would like to share with us, we'd love to hear from you, partner with you, and share with the broader APQ audience. So please let us know. I love to have conversations with our members. Since I'm no longer a practitioner, I feel like my way of staying in touch with all of that is to talk to our audience and find out kind of what they're working on, what their pain points are. And I would love to hear from you. I'd love to have those conversations with you. I hope everyone has a great day. Again, if you have any questions, please send those over to us, and we look forward to talking to you again soon. Thank you.